Hello and welcome to another Switzer Daily update. I'm Peter Switzer, of course. And the Australian's headline in the newspaper today was "Low blow, RBA unsure how high to go." And that's related to the story from Reserve Bank Governor Phil Lowe, who has been facing parliamentary committees this week. And he says there's no end in sight to interest rate rises. He's unsure how much more pain mortgage holders will have to cop in order to tame inflation. Now, after 9 rises, the official cash rate is 3.35%, and Lowe guesses we're not at the peak just yet. How far we go, he says, I don't know, which will surprise a few people. But economists know it's a pretty tough gig trying to work out how you have to raise interest rates to beat inflation. He says it's going to depend on inflation data, the resilience of spending in the economy, the strength of the global economy, and what's happening to prices and wages. Now, CBA CEO, Matt Comyn, he thinks borrowers were only feeling about 50% of the impact of rises so far, and it'll be about 85% at the end of the year. Why? Well, fixed rate loans and other rate rises have a delayed effect on spending, and so they're not really biting totally right now. He thinks by the end of the year it'll be 85% biting. So Lowe says he won't step down, and I say, I must admit, I know why he doesn't want to step down. You might not like him because of what he's doing, but it's the kind of job a Reserve Bank governor's got to do. The problem for him really is that people remember he said that interest rate rises aren't likely till 2024, and a lot of people have done a lot of big borrowing and buying on the strength of that, and a lot of people will not forgive or forget that particular mistake I think he made. Now, to Wall Street, the Dow is down 12 points, S&P 500 up 0.09%, NASDAQ up 0.67%, which is a bit of a surprise because the Yanks got a retail sales number which rose by 3%. Now, economists thought it would go up by about 1.9%. So the number signals that the US economy is holding up despite interest rate hikes from the Federal Reserve. So basically, it cancels fears around recession, but it does keep up the pressure on inflation in the US, and therefore the Fed having to raise interest rates for longer than what people were expecting, say, before this number, and before the strong jobs number, and before the inflation number that was a little bit higher than expected yesterday. So all up, you're kind of thinking there's going to be more interest rate rises in the US, and that's why I'm surprised that the NASDAQ went up this morning. It's going to be very interesting to see how this plays out. When you think about all this and putting it together, you've got to expect there could be a sell-off of the stock market in the US on the fear that the Federal Reserve might raise interest rates more than was expected, say, a week or so ago. Be interesting to see how the market plays this one out, but so far so good. Keep our fingers crossed that there's not going to be a great market overreaction. But if there is, if interest rates go up too high, and the official interest rate is now between 4.5 and 4.7%, and some think it could go as high as 6%. If that happens and there is a sell-off, well then I will be a buyer, because I do think later in the year, when interest rate rises are over and inflation is well and truly on the way down, the stock market will surge. But that's my best guess. I hope I'm right. Talk to you tomorrow.